So, yes, what I was thinking is we do a quick video where I explain basically how you need to play the person on the other side of the screen and not just focus on playing the market or price action. So, the thing about trading, why 99% of people fail, isn't because they're actually stupid. Because most traders who I'm working with, who are joining my mentorships and I'm helping out, are actually really sharp individuals. They have a really good understanding of price, and most of them actually understand and do more technical work than I myself do. So, the reason why most people fail is because they fall for the traps. So notice all my gestures, my movements, how I speak slow, then fast, then watch outside the window, like all this stuff. This is deception. This is what the market is doing to you every single time you go in live. So you may be backtesting for a long time and you actually become successful in your backtesting. Why is this? Let's say you gain 10% each month in your backtesting. Really simple, and it works. And you seem like you can't do this live. And I always told myself it's because I'm impatient and because I don't have the discipline to wait live, because I have to wait for the next day, the next week, the next section, all that stuff. That's not the truth. The truth is, when you watch price live, then it moves in a way you haven't seen in backtesting. It moves to trigger you, to manipulate you. It's the same candles, but when you see them live, it's not the same. So the thing is, when you backtest, you focus on patterns. When you do it live, then the patterns focus on manipulating you. It's the same patterns, but it's not the same. So you have to understand who you are up against in the market. Two main opponents. First of all, we have other retail traders. You have to understand them, how you can play them. And it's not that difficult. They're usually impatient, they're reactive, and they're greedy. They jump in at the first opportunity. They try to be a bit too greedy, and they trade most often for dopamine. These people often react to false breakouts. They chase break of structure, fair value gaps, market structure shift, which doesn't make sense when you look at higher time frames and the overall narrative of price. It makes sense if you just focus on that pattern. If you just watched ICT and you think, okay, this is 9:30 market open, or 10, this is a fair value gap, break of structure, let's go. Like, this mindset in itself doesn't work, and these people are easy to understand. So how do you trap these people is really simple. You wait for a break of structure or a market structure shift with a fair value gap that you know doesn't make sense. You know it's a trap, and you know that these people will bite on this trap. They will take it, and the trade will move a bit in their favor, maybe 1%, then the market just stops them out. So these people are easy to understand and to trap. And the other participants, which you need to actually understand and actually fear, and you have to know sometimes how you can play them and sometimes how you can go with them, because you can't always play them because they're too powerful. And these are the market makers. in opposite to retail traders, these are really patient. They don't trade for dopamine, and they don't need to take that many trades. They have large amount of capital, so they don't need anything from the market, and they also are professionals. They're managing large equity and they have really strict rules. So they often try to tell you a story. You always have to ask yourself not what is price doing, but what do they want me to believe? What narrative, what story do they want me to believe? And that story, that narrative is oftentimes fake. They tell you a story, they give you a narrative of what you think the market is going to do, and then it does the opposite. So it could be something as simple as you think that the market in London session took out Asia high, and then it gives you a break of structure, a market structure shift to the downside. It moves down, and you think this is an opportunity to go short. This is the narrative they want you to believe. And that's when I personally wait for the market to go a bit down. Then I look for a long, and then it takes out the previous high, which created the shorting opportunity and where people got trapped. You know that people are sitting trapped in this area. So people are trapped sellers. You go long, their stop loss becomes your take profit. You get that opportunity to take out the high, and it moves a bit higher, and then you close. That's it. So do you have a better understanding of price action than those people who got stopped out? Are you smarter than them on technical analysis? Absolutely not. You just understand that smart money try to tell you a story, make you believe something, and trap you. That's it. Simply that's it. Because you always have to ask yourself this: if 99% of traders lose, why do you think that is? Because in no other profession 99% of people fail. Like people who try to become lawyers, doctors, surgeons, like pilots, whatever career you want to take. Do you really think trading is, if like, how can I explain this? 99% of people don't fail to become a lawyer or a doctor or whatever, but why do you think it happens in trading? Because in those professions we have rules. It's the exams, like if you study for the exams and you really try your best, then the exam isn't built to make you fail. It's not a trap. The exam isn't a trap. It's made for people who study hard to succeed, but the market is a trap. So you can study all you want, you can do all the right stuff, but the market will still be made like an exam which is designed to trap you. That's the difference. That's why 99% of people fail in trading. Not because they can't work hard, not because they're not disciplined, not because they don't do their homework, not because they don't know how to analyze price. It's simply because the market doesn't operate within rules. It's a zero-sum game, and it's built for you to fail no matter how hard you try, until you understand the deception and that you're not playing price, you're playing people. That's the difference. You have to understand when they try to give you a false narrative and try to instill a story in your mind which is false. So how do you identify, for example, when you should take a short position in EURUSD when Asia high gets swept. So let's say Asia high gets swept and we have really obvious buy side liquidity up there, like 2 equal highs, so you know there are lots of stop orders there. If that happens in the right time in London session, that's when you know that this was a stop hunt. As long as price doesn't go far above that area, you can be sure that this was probably a stop hunt and we could get a short position. But again, you can't rush into that price either. You have to look for confirmation. You always have to be patient in the market. This is usually what happens, because in short positions they often accumulate more before they send price down. They always give you a retracement on the lower time frame so you can take the short position. But if it's just a random high they take out, Asia high, it's not obvious that a lot of people get stopped out there. Most often, if price moves like this and then it takes out the high, pulls back, then that's usually, especially if it goes quick down, if it goes quick to the downside after taking Asia high, then you know it's a manipulation. If it goes too quick, because you should never chase quick price action, that's an indicator that you should stay out of it and that it's manipulation. The real move happens a bit slower. It's not so quick that you don't catch it, because smart money doesn't operate that way. You always have to be patient and let price come to you. You can't chase the market. So if they take out Asia high and they send the market quick to the downside, a bit too quick, then you wait for it to go down, you wait for it to start to consolidate, and you look for a long position, and you know that people get stopped out. If it goes slower, you get a market structure shift, fair value gap, break of structure, confirmation, retracement, re-entry, then you know it's more certain to work. And it's the same when you go long. Like, if the move happens too early before London session opens officially, and if it happens too quick, then you know again that it's a trap, and they're probably going to just send price down again and stop everyone out. But if it happens in the right time and everything looks good, then you know the narrative. So this is what I'm trying to teach people. This is why my students actually succeed in the market, because they're not only focusing on understanding price action, they're also focusing on understanding how to play the other players and not to get played yourself. So if you're interested in my trading strategy, my mindset, my daily analysis, what I'm seeing in the market, click the link in the bio to join my Discord group. And if you want to work with me one-on-one and join my mentorship, just send me a message on IG and we'll take it from there.